Hey, folks, welcome to InTheMoneyStocks.com's weekend daily analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get into the analysis portion of this video. This video is for Monday, February 25th through Friday, March 1st, 2013. And again, this video will look at the markets all the way across last week and into this week and beyond. So what I really want to cover is, again, looking back at what we said in last week's weekend video. And again, last weekend, I gave you guys a video here for free, and I said we would have a down week. Sure enough, the first call of a down week in probably about 7 or so, it turned out to be just that. So a great call right there, and again, it's the proprietary PPT, price pattern and time methodology, that allows us to do this. We teach this to our members, then they do it, and they make tons and tons of money. All right, so we had a down week. You can see very clearly you closed right here on the SPY last Friday, or a week ago from Friday, and then you had a short week, 4-day work week, and this is where we closed. That's definitely lower. This line here, you can see the white line stretching across. That is lower. It wasn't a huge down week by any stretch, but nonetheless a lower week for the S&P 500. Now, the key here to recognize is that you're starting to come into this time cycle, and again, last week on Tuesday was our minor cycle date, and again, my partner, Chief Market Strategist Nick Santiago, gives cycle dates out, and cycle dates essentially create or are a market top or a market bottom. We obviously let you know which one it's going to be. Anytime you've been rising like you have, if you're coming into a cycle date, you expect a turn in market conditions. So again, that's what led us to believe that it was going to be a down week. Tuesday was that precise day, which was right here. And again, notice how the top was put in on that Tuesday. You closed right at the highs of the day right there. And then Wednesday, Thursday, you collapsed before the bounce on Friday. So a perfect, literally to the day call given out months in advance of a cycle date. And again, people just scratch their heads. How does InTheMoneyStocks.com do this? And bottom line is, again, we don't have a crystal ball. We just have these proprietary techniques that we teach our members, and we utilize them to make the calls. So we're analyzing charts based on price, pattern, and time. They're giving us these levels, and we go by the levels. Okay? So that's what we have. Interestingly enough, on this date, folks, we picked up SDS on the long side, which was a 2-time short ETF on the S&P, and that obviously profited a huge amount. And we also shorted the SMH. We had a couple other shorts out there that did very, very well last week as well. But again, I think the key is to recognize not only do we make the turn date calls so we know when the cycle date's going to hit and the market's going to start to reverse, but we act on it. And we gave our members that ability as well by giving them the live calls as we made them. So, here we're shorting SMH, which is the semiconductor index. We're shorting the S&P 500 by buying SDS, which is 2 times short. And ultimately, from that point on, we see the market starting to reverse back down, and we profited quite a bit. The beauty of it is, on this low pivot right here, on the day on Thursday here where we made the low before the bounce on Friday, we moved out of our SDS for a huge profit in just 2 days. And again, we moved out of half of our SMH. And that was the beauty of that as well. So SMH moved out half, and basically the SDS, we took all our profits, and then we got the bounce on Friday. Now, on Friday, we saw and expected the markets to bounce. So literally the week was a plethora of just nailed calls as we called for a bounce on Friday to our members. Therefore, we moved out of the short calls right here on Thursday. And again, the bounce came in. Now, we came right up to the 200 MA, which is a short-term resistance area. We actually do expect the markets to continue to remain weak here, folks, just for a little while. I think into early March, we're going to remain weak. And then I think once we get into that early March period, we're going to start to move back higher again, where we should see the markets head to new 52-week highs. So a lot of people are saying, well, we think the market's going to go down a lot. No. What we think is there's going to be a little bit more downside, but ultimately the markets will turn around and make new 52-week highs. We actually expect the S&P and the Dow to make new all-time highs before this cycle, this next move up, concludes. Now, that cycle will conclude, and then we're going to have massive downside, which will be a bigger cycle, but that won't occur for a couple months out at least. even further, we believe. We believe it's going to top out in a few months, but then be choppy and with some downside, but the big downside won't come until 2014. All right. Couple other great calls from last week. We called the massive decline in gold. I've been telling my members here at In the Money Stocks in the Research Center that this is a short-term bearish choppy pattern with the moving averages right in there. Sure enough, look at the collapse on gold. Beautiful collapse on gold. Gold should continue to see a little bit of an uptick here. And notice how, really on Thursday and Friday it upticked. The more fear comes in the market, you actually could see gold bounce a little bit more. But it will, after this bounce, head to new lows even. All right, so you're going to see gold break down after a little bit more of a bounce. Short-term gold's going to go down here on the GLD to about the 149, 148 level. You'll see good support there. I actually think you go lower, though, ultimately down to about the 140 to 130 level down here, probably possibly down to 2011 lows. Once you get to 2011 lows, you should put in a short-term bottom, though. Okay, so we'll keep you guys posted on that, and there will be a point where I load up long majorly on gold. I'll obviously tell my members when I'm going to do that. All right. Just to give you a sense of some other calls from last week, guys, I want to just show you these calls. Rackspace was a gap down play on Friday, a beautiful gap down play. My partner put out a trigger alert Friday morning for this play. We bought it on the gap down right here, and by the end of the day, we were up basically $1.60. $1.70, something like that. I mean, that is just an awesome, basically, yeah, $1.70 on this trade. In one day, on this swing trade, already up $1.70. So, again, just showing you, and look at this beautiful bottoming tail on the charts. Here we are, making these cycle calls, which are the major pivots in the market, nailing them to the day. We're giving out swing trades, nailing them. We're moving out perfectly at the right time. We're jumping in these gap down plays when the trigger tells us and the proprietary methodology tells us. And, last week we probably had, 5 to 10 trades. I mean, it seems like on the Research Center side. Early in the week we moved out of some trades, midweek, late week, you name it. For a 4-day week of trading, it was just intense on the swing trading side with tons and tons of profits and nailed calls. So, again, just to show you another example here of Rackspace. This is where we bought Rackspace right here. It's already $1.670 in the money. We're probably looking for a move back up here right to around the 56 level, give or take a little bit, which we could see as early as Monday or Tuesday of this coming week. A couple other stocks to watch here. Let's take a look at some other charts here. JP Morgan had a nice pullback midweek, but bounced on Friday with the rest of the market. JP Morgan is the market, so if that's bouncing, you expect that to bounce, and we'll kind of watch and see how that all plays out. Let's see what else we have. Goldman Sachs also bounced nicely, but notice how Goldman came right into the 20 MA there. That's what you expect. Notice how you haven't hit the 20 MA all year. First hit is always going to be support. That's the methodology 101, proprietary PPT methodology here. All right, you're going to get a bounce right there. Now, eventually it will break through that, but not in the short term. In the short term, it's going to continue to grind up just a little bit, and then I think later, mid to late week of this coming week, you should see. Overall, I expect another down week in the markets, folks. We're heading into the sequester. You have issues bubbling up in Europe again. If you have a bunch of elections in Cyprus and so forth, which is kind of interesting, and Italy and all this stuff. So that's kind of something to keep an eye on as well. The UK got downgraded on Friday from their AAA status. Not a big deal, though, to just one downgrade slightly. So it's not going to really affect too much there. All right. Again, look for continued volatility. This is a swing trader's paradise. If you're a short-term swing trader where you buy something and you want to hold it for a week or two or even just a few days and make 3, 5, 10%, this is the time to do it. All right, day trading is awesome as well. I mean, day trading last week was spectacular. I mean, I had a couple days where I made 5Gs each day, just trading basically a $50,000 account. That's 10% return in a day on day trading. You haven't even heard of that. I mean, that's unheard of, the type of great profits we were generating. Small caps, large caps, doesn't matter, ETFs. All right, let's take a look at Apple. Apple did bounce up a little bit on Friday. Stock still continues to be very weak. There's more and more talk about the possibility they're going to have to give out a cash dividend that could keep the price up a little bit. But if the market continues to be weak, I still think eventually this stock heads to the 420 to 400 level. All right, it's only about $30 away. Options X on Friday, the weekly options, they closed it right at that 450, just like they closed Google at the 800 level. All right, Baidu's been a weak play until recently, just bounced a little bit on Friday here. So you can see it also bounced on Thursday. I think this stock is coming into good support down here. Eventually, it'll break through this and head lower. But in the short term, you can see it did tag this area from the tail here down, and again trying to find some support. So it probably gets a little continued bounce off that, but then heads lower. And I think the next level is actually about 77, believe it or not. If you go back here, folks, little pivot area from 81 to about 77 right here. That's most likely going to be your trigger range for a swing trade on my books. All right, I'm going to be putting out more trade alerts, guys. The calls were unbelievable last week in the Research Center. Remember, Research Center is for swing traders. Again, Research Center for swing traders and investors. If you're a swing trader or an investor, 401k, IRA, investment account, Research Center is what you want to be in. That's going to give you the live alerts, live trades, calls, cycle dates, you name it, teach you the proprietary methodology. Then if you want the other angle, if you want day trading, the intraday stock jet, 7-day free trial for both. Get on it now. The profits continue to flow. We're going to be making tons more trades this week. Again, get in here now. Get it started. Take care, guys. Have a great rest of your weekend, and I will see you bright and early Monday morning for more profits.